Yeah, good to be here. So from our standpoint and the findings that we have seen through our Shanghai-based research team, we see Tencent continue to find unique ways to drive revenue growth through their ecosystem. As you mentioned, there is fierce competition, but they have been quite successful in driving that growth. One area in particular I'll just mention that we'll probably hear about tonight is their WeChat platform. With over 1 billion monthly active users, it is a very sticky environment for a lot of users in China today and globally. And one example where we're looking at more closely is their mini programs area. These are apps that you as a user can use. It's much like an app that you would download from an app store, but it appears inside WeChat and gives you that same feature and functionality. But the interesting thing about these mini programs is that they're starting to place banner ads on them. And we think that's going to be a pretty material revenue opportunity over the next 2 to 3 years. And it's just another example of Tencent finding unique ways to drive revenue growth inside a very robust ecosystem, and one that we're watching very closely.
You know, Joseph, with the threat of trade tariffs hanging over both the U.S. as well as China, you got to wonder what people in the market call the bat stocks, Baidu, Alibaba, Tencent, of course, whether or not they are going to get caught in the crossfire in any way. Do you think they will? Do you think Tencent will?
It's an interesting situation right now. Obviously, the tariffs are going to impact the imports of products coming into China that consumers are purchasing, and clearly it's going to have potential impact on those companies that are producing those products. It's hard to tell whether it will have a material impact on the likes of a Tencent or Alibaba that do operate obviously significant e-commerce operations. And certainly it won't have an impact on the domestic brands, but it's certainly an area that we will be watching closely based on the data we're tracking. But hard to tell right now. I think given the nature of these businesses being so focused on China consumers, I think these price points tend to be on the high end for imported products already. And so I don't know that we're going to see a material change in consumer spending when, you know, there might be a 15 or 20% increase on a product that's already 5 times the price of what a domestic product would cost.
Now, Joseph, you were also talking about some of the strategies that Tencent is using to drive that revenue growth. And of course, they do have ties to the Middle East. One of the deals that they've made recently, of course, was Dubai tourism. They were talking about finding ways to really promote Dubai when it comes to China, to the Chinese market in particular. What other areas do you see them working with folks out here in the region in that kind of way?
Yeah, it's interesting. I mean, I think they're looking for partnerships and investments that are going to drive consumers both domestically in terms of spending as well as internationally, and travel is clearly an area that we're seeing potential opportunity for them. And we're going to, much like Alibaba, we think Tencent is clearly looking to drive that ecosystem more broadly. So whether it's travel today and it's online video as well, clearly a very important part of their business, as well as social and games. And so we would think investments in those areas that drive both domestic growth and international growth will be on the horizon for them in the future.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.